Hello, everyone, and thank you for joining us for another episode of Building Your Legacy with Life Insurance. I am Marcella Mullen Williams, and I'm joined with Mark Mullen. We are the co founders of Legacy Builder Group, a holistic coaching and investment firm where we help you build wealth with purpose. We are here for episode 2 of Building Your Legacy with Life Insurance in honor of Life Insurance Awareness Month. So, today's episode, we'll be talking about not your grandparents' life insurance. So, Mark, let's go ahead and dive in this conversation. Uh, I'll start off a little bit because I want to make sure that if you did not catch episode 1, please go back to our YouTube channel and watch that first before you continue in this episode. I think it will bring some clarity. But I do want to just recap just a little bit so that we understand when we're talking about legacy and building your legacy with life insurance. We are talking about how other people experience your existence. We hear the word legacy thrown out so often, but I see clearly that there's a lack of understanding. Some people just associate it with money. So we and Mark and I, we had this conversation in the first episode. That's why we want you to go back and watch that one. But for us, we know that it's more than just money. Yes, money is involved. But when it comes to legacy, there is so much more richness to add to our lives and to allow other people to experience. So that's what we're here to talk about. That's what we talked about last week. That's what we're talking about this week. And that's what we will continue to insert in every episode how other people experience your existence. So let's talk about it.
All right. So I think the first thing we need to address, Marcella, is more of the mindset. So
Yes.
that's why we say, let's not think of our life insurance the way our grandparents thought about it, right? Or
Yes.
even our great grandparents, we
Yes.
have to look at it differently. So I think we need to understand what we call that depression era thinking. I think that's the
Mhm.
first place we like to go there. So let me ask you, Marcella, when we talk about depression era thinking, what's like the first thing that kind of pops up in your head when you think about that mindset back then?
Well, thinking about the Depression era, the Great Depression, my first thought is, you're thinking about scarcity. There's lack. There's a lack of abundance and fear around that. So scarcity is definitely the first thing that comes to mind.
Right. And it makes perfect sense, right? Even in the last year or two or three, where we saw diminished supplies, highest inflations we've seen ever, we started to fall back into that scarcity mode, right? So that
Yes.
concern
Yeah.
about not having enough and everything, that plays a significant role when it comes to our mindset, right? How we think about money
Mhm.
and even how we invest, how we're able to move that money along to our next of kin, how
Right.
we can stumble across our legacy planning, right?
Right.
So scarcity definitely plays a role in that, and we have
Hmm.
to make sure that we address that, which we'll talk about shortly. But then there's another area that we have to address, again going back to that depression era thinking, and it's the one that we can look at when it comes to fear of debt
Yeah.
and how that can really alter the way we handle our money. So I
Yeah.
think, and again, we'll touch on that in a little bit more. So we talked about scarcity, we talked about fear of debt,
Yeah. That was
and the last, what was that?
yeah, no, that was happening a lot in that time period.
Exactly. And what's number three, the one that I feel like is more to your heart because it's prevalent even today, the
Yeah,
lack of,
the lack of education. That's the conversation we were having. Lack
yes,
of education. That was, there obviously there's no internet. Like we're at a time where there's information overload, and it was the opposite there. So you're in the midst of this Great Depression. You're in the midst of all this chaos and concern, and then there's this lack of education in the midst of it.
yep. So we're
Yeah.
talking about scarcity.
Hmm.
You add that to the fear, and then now you don't have enough information, which just capsulate everything into this one perfect storm, right?
Right.
When it
Right.
comes to our mindset. So these are areas that we have to address before we can go even further, because this mindset still exists today. in
Yes.
2022.
Yeah, it does. And I mean, right now, we need to move from depression era thinking to an abundant mindset.
Yeah.
That's what we're talking about here. It's like we can't be stuck. We can't be in this time of technology and access and abundance of information and still behave how people behaved when they were going through the depression era. And we see that all the time, right? Like that's
Yeah.
what we're coming across consistently.
Yes. And it's that same mindset, that frame of mind that hinders our ability to move forward when it comes to our goal, when it comes to the legacy planning. And
Yeah,
so it's very important to move forward. You have to address what's holding you back, right? So this is where education now comes into place. So you have to open yourself up to education and allow yourself to be vulnerable, right? I think with all the programs and different courses that we've taken, some of them have really forced us to be vulnerable, right? To
right.
expose ourselves. But in doing so, we become stronger. We become better students of ourselves and
Hmm.
how our mind, our thinking holds us back. So that's why I'm so glad when we were talking, you said, we have to address this piece first. We got to address the mindset first. And I love how you always talk about fear and how that's the opposite. I think I'm using your terminology wrong, but how fear is the opposite of abundance, right?
Yeah, yes. I mean, there's some opposites, but I do consider that also. Fear is the opposite of abundance
Right,
because
exactly.
the two can't work together.
That's the best way to say it.
Yeah,
The two doesn't work together, right? They cancel each
yeah,
other out, right? So
exactly. Yeah, if you're operating in fear, then you're not going to be in a position of abundance that you're probably hoping for,
yes,
seeking. And then people who are in abundance, who remain, and I'm talking about abundance, remain in abundance, they're not living in fear. You know what I mean? So that's why that
exactly.
has to change. There has to be a factor. And one of those things is, I want to go back to lack of education because that's so important. We we so often take the traditional route of what we think is, education. Um, and whether the different types of schooling systems, that the traditional ways that we feel is the right thing to do and it's what we're supposed to do, but we're not actually learning what we need to learn to get to where we want to get to. And that's a part of what we're talking about here. What are you consuming for your growth? And so if you're still behaving like things were back then with, like I said, with the access that we have now, that's part of the issue. That's a part of the problem.
I definitely agree with that. And to expand upon that just a little bit more here, we have to look at how things change, how the economy and the products and the supply and demand and technology and all these different things change over the course of years. Let's face it, certain things as far as human behavior doesn't change much. But when it comes to our lifestyle, when it comes to technology, when it comes to medicine, when it comes to information that we have more exposure to. These things have changed. So to go back with an older mindset and think, actually, let me be more specific here, to take the strategies that our great grandparents had and
Mhm.
say they're still more than ever relevant today without checking to see what's going on today, it could be a big hindrance to to your wealth and potentially health. Um, but so we have to make sure that we are keeping up with technology. We're keeping up with what's going on in our world today.
Mhm.
A great example is that is how much the world's economy is becoming globalized, right? So
Yes.
we can't have the mindset that, oh, it's only the United States. That's all we
Mhm.
can look at. No, because between the transportation system, the electronic system, all these things that have just connected all these countries so that
Yes.
the world's become a smaller place, but we can't think so limited anymore. We have to think in a much grander scale. So the
Right.
same thing when it comes to life insurance. We can't look at life insurance 30, 40, 50 years old and say, "Oh, it's the same as today." No, we gotta we bring you up to the updated, new, and improved 5.0 version of the life
Yeah.
insurance because it's so vast what it can do today. And I'm so excited about touching into that throughout the course of these weeks.
Yeah, no, and I'm glad you brought that up because again, as we talk about our grandparents' life insurance, you have to think that, it's called life insurance for a reason because it should be about life. But I think
Exactly.
when we deal with people, the focus is on death. And that's the thing that needs to change because that is what was thought about before. When it came to life insurance, people were thinking about death benefits. Okay, what
Yes.
happens when I die? Let me take care of my family. There was no life involved in that process. And that's one of the things that have changed that, we can't deal with life insurance the same way that our grandparents and our great grandparents, depending on who's watching this, uh,
Right.
was is dealing with life insurance because life insurance itself has changed significantly. So we have to get knowledgeable about these changes, as you just said. We have to move away from fear, move away from lack and scarcity, and really totally, like I said, shift your mindset completely again from depression era thinking all the way over to abundant mindset. So hopefully we can help some people do that today, Mark. We can do that.
Exactly. I believe we can. And that's why we're here today to
Yes.
provide the information piece because
Yeah.
let's face it, the industry itself, I mean, considering how long the industry is, I'm just a drop in the bucket of all the years that's been there. But, we have a saying that our father told us either you're part of the problem or you're part of the solution. So for
Solution.
you and I, we want to be a part of the solution. And so I go
Yeah.
back to the industry because the industry played a large part of its problem, right? It's look. It's
Mhm.
the way people think of life insurance agents as car salesmen, right?
Yeah. Yeah.
It's that negative persona. Well, it's kind of
Mhm.
your fault, when it comes to the industry, right? So how do we go about changing that? Well, this is
Well,
where the education comes in to
yeah.
help people understand that, as you said, it's about life insurance.
Right.
We're not
And I
death.
just wanted to oh, go ahead. I just wanted to add one thing, but go ahead,
Yeah, go
finish your
ahead.
thought. I was just going to say that, as far as the selling of life insurance and how that went about. And it's funny as I think back at when we started in this industry. And again, we started off with life insurance. Now we do comprehensive planning and an array of options for our clients. But when we started off young into this industry, it was life insurance. And remember, it was not even about selling life insurance. We came because of the strategy of this new concept we're talking about, this
Yes,
abundance thinking, because we learned education, we learned that life insurance was an incredible tool for building wealth for your family. So we were legacy minded. I hope everyone say legacy minded. You're listening, watching. We were legacy minded, and we came into this industry because we saw this amazing thing that we not only wanted to implement for our own family, our own young families, but for other families. And I think that plays a big part as to, even why we're here still talking about it after over 15 years and why it hasn't faded because it's so powerful. But like you said, yeah, the industry, if you make it just about selling life insurance, then that goes back to depression era thinking. That goes back to an old way, an old strategy that is going to get you stuck and you just won't be able to take advantage of the abundance that's there for you.
I agree 100%. So, Marcella, let me ask you this, or let maybe we should share with the audience what are some of the ways that we're coming to them with education.
Mhm.
So, how can we address the fear of debt or the scarcity mindset? What are some of the things that maybe we can educate our audience to address these things? Because whether it's life insurance, whether it's health, whether it's religion, at the end of the day, these things that we're talking about here that's hindering us financially can impact every aspect of our life, right? That's one of the
Mhm.
things that we've noticed that, yeah, we talk life insurance, but the concept or the mindset we're bringing into our audience can impact every part of your life. So, my
Mhm.
point here is what can we share with them today? Just give them a little nugget as far as how to address these fears, whether it's scarcity, whether it's concern of debt. What's a little summary we can give them today?
I would start off with the simple phrase of understanding why and
Mhm.
what. So I go with why and what. So I think one of the most important questions you can ask yourself, I mean, it's just a powerful question. Ask yourself, what do I want? We don't ask ourselves that question. And we're floating around through life trying to figure things out without actually knowing what we want. When we are brave enough to ask ourselves what do we want and then dig into that, that will uproot some things. And when you uproot some of these things that and include fear, scarcity, these mindsets come up when you ask that question. Because
Mhm.
then you start thinking, well, I want this, or should I want, am I allowed to want this? Or maybe I mean, there's so many things that come to play when you
Let
ask
me. Ooh,
what.
I love what you're saying. I got to interrupt. My apologies, but you hit such a good point right there because I love how you said, "This is what I want," and as soon as you come up with it, you're giving yourself reasons why not to want it. And
Yes.
that's so powerful because it's very easy to say, this is what I want. But when you go into the this is what I want, but you just reined it back. You just pulled it back. And I think I had to pause there because a lot of us, and I fall victim to that sometimes, where I go out there and I say, this is what I want. But the old Mark sometimes tries to ring up his ugly head and say, no, 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 this is why you can't. And I have to say, no, this is the desires of my heart. This is what I want, either for myself. This is what I want for my family. I know I cut you off here, but the other thing that I've learned from you
Mm-hmm.
is it's not just about what you want, right? We're still talking about wants,
Mm-hmm.
but being very detailed in what you want. That's the thing I learned from you. I've seen how detailed you are with the desires of your heart and how
Mm-hmm.
specific you are, and then how they manifest. So I just had to add that piece because, again, you're a perfect example of how details really impact your want.
Well, I appreciate that because you're right. And I have my journal right here.
Uh
I'll keep my journal handy because yes, I am detailed about what I want, and I write it in my journal with great detail, with great certainty, and confidence of what I want, because I believe that my heart's desires are lined up with God's desire for me. And I think that's a whole nother discussion about the fear of that and what's wrapped around what we want, and especially those who are Christians. And there's a whole, like I said, a whole issue that comes with that. But once you get yourself in alignment with who you are, who God is in you, then it clears things up a lot. And so I put that in my journal and I'm clear on what I want. And then the other thing I was touching on is why. Why? Why? Your why. I'll put it out. I'm saying why. Why do you want it? Yes, why do you want it is important. But knowing your why. So, and that's been popular. I think Simon Sinek wrote a book, about your why. And that's been going around a lot. So people have started to understand that concept. And I think it is important. It's just combining the why and the what is a powerful combination that will really get you thinking about more. It'll it will get you thinking deeper, and it will allow again to uproot the scarcity and the fear they may be settling within you and keeping you down, keeping you in that depression era thinking, and not allowing you to really thrive in an abundance mindset. So like I said, I'm glad you went into this a little deeper, Mark, because yeah, we really, how do you have the continue any kind of conversation and any kind of education when every time we say something, you're thinking, there's a story you're telling yourself. Every time we
Exactly.
talk, when we talk about life insurance with every episode, there's going to be a story you're telling yourself. And you have to address that's not about us. That's not about what we're saying. We know what we're talking about. We know this works. We know we know this is abundance. But if you're having a problem or you have any pushback with what we're saying, then you may want to reflect on that. Reflect on where your mindset is right now. And we're happy to have that discussion with you. I'm happy to sit down with you if you want to explore what's going on with that. But yeah, that's enough. I won't ramble. Go ahead, Mark.
No, 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 no. You hit some good stuff here. And again, everything has to be done in steps, right? So we want you to understand your what and your why, and be open to the possibilities without any self doubt or we call self talk.
Mhm.
So once you get to that stage, you understand your why, your what. In this case here, how do I generate a legacy, and be very specific what you want that legacy to look like. Then we could talk about the construction, the engineering of that, right? So
Yes.
to do that, this is where we have to understand the historical benefits or the historical journey of
Mhm.
life insurance, right? And
Yeah.
so when we talk about that, but we can't go any further unless we bring up this certain individual or his company and how they dramatically shaped the
Mhm.
way we look at life insurance today. We have to get acknowledged to that, right? So
Educate the people.
exactly, let's educate the people, right? So let's talk about the early 1980s, right? And we have to understand that in the 1980s, I know this be might be hard to believe for for certain individuals, but there was no definition of life insurance. Like, we all understand what life insurance is, but legally there wasn't really a definition, a legal explanation with a code next to it to say this is what life insurance is, right? So there was a gentleman by the name of E.F. Hutton and his brokerage firm. And what they did is they realized, staying with the guidelines at the time, that they can utilize life insurance for their affluent clients so that they could take tax advantages of these life insurance policies. So let me dive in a little deeper into that. We're not going to make it too technical today, but I just want to touch on it. He realized with certain life insurance policies, so we're not talking about term, we're talking about permanent products that hold cash value. He discovered that you can use these policies to put in as much cash as possible, and he would show his clients how to take that money, to extract that money out of these policies tax free. Now, Marcelo, I don't know about you, but I'm a big fan of tax free. And I'm assuming a
Me
lot of people that are watching this feel the same way, right? So,
right. Better be.
exactly, right? So, we're not talking about tax evasion, okay? Because that's illegal, right? What we want to do is eliminate tax as much as possible, but in a legal manner, in a constructed vehicle. In this case here, E.F. Hutton discovered life insurance to be the vehicle that can do that. Now, here's the thing: when something is really good for the people, sometimes the government tries to get in the way of that, right? It's like, oh, this is too good, right? So we got to dial this back a little bit, right? And would you believe that the IRS went after E.F. Hutton,
Oh, I
telling
can
him,
believe it.
exactly, right? They said, you can't utilize life insurance in this manner. And he said, yes, I can. And we can discuss it over court. And guess what? They went to court and he won. Why? Because at the end of the day, he never violated the Internal Revenue Code, specifically 72E. Now, I'm not going to go into details about it, but it is the part of the code that allows life insurance to benefit from that tax free structure. So just keep that in mind, right? So that's a very important code.
Mhm.
So because of that victory, you and I still have the benefits of utilizing life insurance in this manner. Now, the government did make some alterations to limit
Of course.
how we use that, right?
Learn from their mistake.
Exactly, because let's just say there was almost no cap to what E.F. Hutton was doing. Again, all of it was legal, but the government said, "Oh no, okay, we'll still let you have remnants of this, but we are going to limit what you can do." So in 1982, the first law that was written was the Tax Equity Fiscal Responsibility Act, what we call TEFRA for short. And in that, besides the next one, DEFRA, which is the Deficit Reduction Act, this created what we call the corridor today. So anyone that's utilizing this strategy as an agent or financial advisor that's life licensed, they should understand what this corridor is. And this is very important because if
Yes.
you violate this corridor, you lose the tax benefits that pretty much defines why we're utilizing this strategy. Is what we call a modified endowment contract.
Mhm.
That's not what we want for this particular strategy. So the corridor is very important to understand when we're constructing this under the TEFRA and DEFRA rules.
I just want to pause for a second there, Mark, because again, you point out something that's so important when it comes to, especially today, our DIY mindset, or we think that,
Yes,
oh, wait a minute, it's just a life insurance policy, or it's just something simple to set up. I can just go to anyone to do something. No, 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 no. Whoever, when you're working with someone to set up a strategy like this, they have to be familiar with these guidelines, or else you, as the client's the one that will pay the price. You will have to deal with the consequences, not them, but you. So I
exactly.
don't want it to be easily overlooked what you just said.
This is, I guess, this is the line. Leave it to the professionals. Okay, so that's
Yes.
exactly what Marcel is talking about here. This is not something that you want to mess up in, because we're talking about utilizing it to max out the cash. So yes, there is a death benefit because it is a life insurance policy by by definition, right? So with that in mind, there is a death benefit, but what we're doing is not focusing on the death benefit, aka face amount. What we're focusing on is the cash value, how we can make the cash value grow as fast and as efficient as possible. And I haven't gotten on the good stuff when it comes to how the money grows inside the policy. That's a
Right.
whole nother conversation right there.
Yes.
And again,
Yeah.
we'll share more of this. I'm just kind of setting down the foundation, right? So we talked about TEFRA that was constructed in 1982, and then 2 years later we had DEFRA, and then in 1988 then the TAMRA, which is the technical and miscellaneous uh, revenue act. So excuse me.
Yeah. There
So
we
let's
go.
try this again, right? The technical and miscellaneous revenue act.
Yeah,
It was,
miscellaneous is getting to you.
I know, right? So that was enacted in 1988, and what this did, well, let's go back before this came into place. So imagine having $100,000, and
Mhm.
you can shove in $100,000 into a life insurance policy with the least amount of death benefits possible. You put in the policy, never put any more money into that policy again, and yet that policy will still continue to grow. So you took what we would say the guideline single premium. So in other words, the lump sum, and
Mhm.
just drop it into the policy, and you're done with it. Well, thanks to the Act of 1988, the TAMR rule, you can no longer do that. Now, what the government's saying is, with the $100,000, well, you can't shove all of that in 1 year, but you can shove in maybe 15,000 or 20,000. There is a specific formula to determine that, but they will allow you to shove in as much per year until you hit that $100,000, which is typically between 5 and 7 years. So they will allow you to shove it within that time frame. But no longer are you able to take the $100,000 into my example and drop it in 1 year. So you are still getting the benefits, but it's on a limited capacity compared to what it was, in the 1980s. So those that were utilizing this strategy back then, yes, thank you, but we get a portion of that now, but it's still so powerful even today. Now, the reason again why we're sharing this, because Marcella said it, right? We do not want you to try this at home, because violating these rules may potentially cause you to fall in a taxable situation. And for
Yes.
many people out there, this may be your only tax-free bucket. So the last thing you want to do is to take your only tax-free bucket and now convert it to a taxable vehicle. Doesn't make sense, right? So
Yes.
great point, Marcella, that you brought up there. Anything else that you want to add to that?
Yes, I just, I'm glad you're going into these details. And I know for some people watching, this may seem kind of technical, maybe it went over your head. It's okay. It's not for you to consume it all at once. This is a conversation that you take in with bite-sized pieces. But the key is to stay in the conversation. If you may have to listen to this a few times, again, have a conversation with us, reach out to us. I'll just put our website over there so you can know where to reach out to us. But you can reach out to us to stay in the conversation about this. this. But the important part is that you are aware of these details because, Mark, you and I both know we hear a lot of people talking about this. We're not going to sit here and claim to be the only people who have this tool and the only people who know how to do this. We're not. It's out there. But what we are here to do is to make sure that you understand both the benefits and the consequences, and that we're going to provide you with the most education possible because we continue to hear people talking about, oh, the ways you could create wealth through life insurance, and you could build wealth, and you could do this, and you could do that. And I watch people get excited about all that they could do with life insurance. But I do not hear in these conversations these details. No one breaks it down and talks about, oh, wait a minute. Now, there are some things, there are some rules. These are the guidelines to cover. I'm not hearing enough of that. And that concerns me. That concerns us as financial coaches, as educators, as students, lifetime students. We know how important it is to continue to learn, to stay in a conversation. So when you're just hearing people talking about the wealth building part, that's great. Get excited because it's a powerful tool. But keep in mind that you have to do your due diligence. You have to go in deeper and you have to see what is involved, all that's involved, because not everything is for everyone. And we're not here to claim that this technique, this tool is for everyone. This strategy is for a lot of people and it will benefit a lot of people and a lot of lives. But the strategy needs to be dealt with as a one-on-one basis and looked at in a large, full scope in order to make sure you, the client, the person who wants the strategy implemented to their family, is safe, is protected, and is well taken care of.
Thank you, Marcella, for bringing that up because that's such a valid point, and it's one of my irritations when it comes to having access to so much information. There's this tendency to talk from a very broad brush approach, right? So it's just taking the fire hose and just giving everyone the same things, like here you go, and not realizing that you really need to make sure that whatever strategy you're looking at, that it's tailored to you. And when we're talking about this particular strategy, utilizing life insurance as a legacy generator, then it's even more important to make sure that it's the product for you. And when we talk about the products, we'll go into more detail about that, that it's based on how much you're funding it, what time frame are you looking at. It's a life insurance policy. So whose life is it going to be on? Will you qualify? Do you need a surrogate? It's all these different things. Do you have enough death benefit? Because we're always talking about the least amount of death benefit, but will that least amount of death benefit be enough in case something does happen to you? So it's all these things that need to be addressed to make sure that is a tailored plan to you. So yes, we're providing the information, as Marcella was saying, but at the end of the day, if you really want to find out if this makes sense to you, this is where you have a one-on-one consultation and make sure that, yes, this is something that you and your family would benefit from. So I'm so glad you brought that up because you know how I get about that. When people start talking, I'm like, here we go.
I know. I know. And again, I'm excited. I mean, I want people to get excited about them, but I want them to investigate. I want
Yes.
them to go in deeper, ask
Yeah.
questions, do an analysis, and it's one of the reasons why we do the way we do it. We are strict about how we work with people. We have a specific way of doing it. And we don't budge from that because we know that our strategy, our system helps protect people.
Exactly.
And when it comes to this type of thing, but we can't want your well-being more than you want your well-being. We can't want
Exactly.
you to prosper more than you want to prosper.
Hmm.
And so, it's just important to, yes, get excited, want more, do more, but do your due diligence
Yes.
and really learn everything there is to learn about this strategy. Not even, again, just listening to this video is not enough. Gotta
Exactly. Right.
take action.
Right. Because it
Think
goes
about
back to
what's
what you
there.
said, right? It goes back to what
Yeah.
you said. This is not something you should be doing on your own. And I'll be very specific here. There are a lot of life insurance agents that are just there to sell your product to get their commissions. Those are not the ones you want to work with either
True.
because they'll say, oh, I know about the product you're talking about, But the question, and this is where you and I really differ from the average advisor.
Yeah.
We came in with the intention of we want to utilize life insurance in this manner.
Yeah.
We're not here to sell the product. We want the strategy, and life insurance is
Yeah.
the vehicle that will allow us to do it. So we came in learning, understanding the TAMRA, TEFRA, and DEFRA rule. We had
Right.
to want to make sure we didn't violate those, right?
Hmm.
We are the ones that had to understand the 7 pay and the guideline single premium and all these different things that you don't have to worry about it because we have mastered that.
Right. And there were
And that's
so
what we try to
many
do.
people. Yeah, and I was just adding to that because when we were doing this, so many people did not know how. Now, what, 15 years later, there are a lot of people out there, like I said, talking about this, but people were not even talking about this
No,
back then. So here we go coming in to the industry and like, no, this is what we're focused on, not just selling insurance, not just term, not this. And we're not knocking the fact that without a strategy, everyone needs basic insurance. Like if you
right,
if
right.
you qualify to do this wealth building strategy, still having life insurance for the death benefit, it's an amazing way to build generational wealth, to at least start the process with the next generation, even if you can't do it for yourself. But the key is that we're just teaching you something a little different, taking things another level. And there's really no reason not to know this at this point. And it's no reason to not understand that you have to be working with someone qualified to do this.
I agree 100%. So when we go back to the history, there's been a lot of changes, both from a product perspective, from the laws and regulation perspective, even from the carriers, the life insurance companies. There've been a lot of changes going on. So I think it's very important that people understand that yes, we may not have the same ability of funding these policies the way E.F. Hutton did back in the
Mhm.
early 19 late 70s, early 90s, but we still have access to the strategy. Now, yes, I'm going to be very clear because Marcella brought it up earlier. We're talking about life. We're focusing on the life in life insurance. So utilizing the death benefit, um, yes, that's important for your beneficiaries. But with today's policies, that death benefit is still a part of the life in life insurance.
Yes.
So let's break this down here. So,
Let's do
Marcella, one of the things that we could talk about is the how we're dumping all this cash into these policies, and with the goal of doing several different things, right? So one of them is what we call the tax-free income. I touched on that earlier when I went through the history. What E.F. Hutton was doing, utilizing these policies, and let me give you an example, to create your own tax-free income stream for retirement.
that.
You
Yes.
know, that
We
is
don't
one of
have
the
too many
ways.
of those options.
Exactly. Oh, Marcel, I remember the days of the pension, right? There's still
Yes.
people, the government, if you work for the government, you still have your pension, you still have your FERS. But in the private sector, there are not too many. I think we can go a whole year meeting new clients, and at the end, they maybe, I can't even give you a head count. We might count maybe two or three out of hundreds that we
Mm.
talk to that may still have a pension. And some of
Yeah.
those pensions are going away. Okay, so the two
Exactly.
or three,
Oh,
exactly.
so
So being able to create your own in a tax-free environment is phenomenal.
it
You
is.
can't even get that on on the government level. Your pension with the government is still taxable. So it's very important to understand being able to create this as a tax-free income source on top of everything else that you're doing is a phenomenal strategy. That's one of the things that the life insurance today will benefit you when we focus on the life. Now,
Mhm.
there's other benefits of that as well, right? And so let's talk about leveraging. This is something
Let's do that.
that, Marcel, we may have to have a session just for this, right?
Yes.
But leveraging is so important because we are shoving all this money. So the strategy, we want to maximize funding your life insurance policy. What would that allow you to do? Well, we talked about generating tax-free income. That's one way. Well, Marcel, and I really want you to be involved in this part here, because
Yeah,
this is why we're here today, right? So
yeah,
what
exactly.
we're
Let's
talking
go.
about here is creating a vehicle that will allow you to become your own bank.
That's right. That's
Marcella,
the power. The
come on in.
family.
Reel it in, reel it in.
Family bank. You know, the power of a family bank. And it's being able, as you're talking about, leveraging, uh, leveraging your cash, being able to being liquid, being able to use other people's money. You know, we've heard all of these terms. Being, but let's go back to the family bank because I won't go. I'll leave you to discuss, the
Yeah,
details.
yeah.
One of the most exciting concepts that we will continue to touch in more detail on later is the concept of what we call the family bank system. And that is the ability to tap into this resource to build wealth for you and your family. And we call it a bank because it operates just as a bank would. You borrow against yourself, you pay yourself back. And all the while, just as banks are making money on your money when you borrow against them, you are making money on your money when you borrow against yourself. And I know it's like, how? What are you talking about? Don't worry, we got you. We got you. We got you. We'll get you some more detail. But there's a power in that. And that's where the legacy part comes in because it's about, yes, the money, the access, all that you could do to build generational wealth from generation to generation to generation. But it's about the mindset that you're teaching, that you're passing on, that you're learning as you educate yourself, but then you pass on to your children and then your children's children. That education that you pass on to them with this concept, there is no school, no university, there is nothing that can compare to this level of education for your children. This is freedom. This is setting your mind free and setting your children free. I don't know anyone who does not want that. Like, if you don't want that, you want bondage, you want what you've been doing, you don't like what's been going on with your life, but you want to keep doing what you've been doing, that's insanity. We're talking about freedom here. And that's the power of this tool. That's the power that this is capable of. And well, Mark, okay, so I feel myself going there. So I'm going to pull back now. Pull
So
back now because,
yeah, let
near and
me
dear.
jump in here. I will
Okay.
jump in here because there's so much we want to share, but we do want to stay within the designated time frame here. So,
Yeah,
what Marcella is talking about here, the family bank, the life insurance is a vehicle that will allow us to utilize the way it's structured to be the vehicle that you can borrow money from. But here's the thing: you determine the amortized schedule, you know, how much you want to pay into it. There's so much control you have instead of leaving it to a third party. And so imagine, let's give us, Marcella, can I give an example? Can I give
please
an
do.
example?
Please
Thank you. So
do.
let's say, for example, you've created a family bank. Your children grow up, now they're ready to go to college, and you're thinking to yourself, well, the average person, well, let me see if I can find some grants and a loan and all these different things. But with someone that has the family bank concept, well, you are the bank,
Are the bank.
you are the lender. So your son or daughter, your child will go to the family bank, draw the money that they need from that bank, tax free because it's not your money, it's a loan. So let's say, for example, you take out $10,000, right? You take it out of the family bank. Well, that's not your money you're collecting, so you can't be taxed on that. You're borrowing the life insurance company's money. Your 10,000 is being used as collateral, and that money is still making money. So your money, no matter what, is still, that $10,000 is still making money, just being held as collateral while you're using the 10,000. And now you pay that money based on the schedule you have designated for that child. And when they pay that back off, the money's still there. It was still growing while it was being used. And guess
That's
what?
right.
There was no hard pull on your credit. You don't have to
Right
jump
there.
through any hoops or anything like. No. You can be jobless or employed, doesn't matter. You always have access to those funds. Marcel, you talk about freedom. I don't know how much more freedom you can get when you control the bank. You
Ah, right.
know, I mean, you said it
That's
right
it.
here. We're really talking about freedom, you know,
Yes.
and
And,
we're
and
not going to limit it to just college. It could be anything.
right. No, I mean, my daughter did this with her first vehicle. She bought her first vehicle and she went into her family bank. She had the option to stay liquid. She didn't have to use her money. She didn't have to use cash to pay, put down a drop it and a lump sum into a vehicle because she has access to her own bank. And she was able to pull money from there to purchase her first car. My daughter, she did research. She knew exactly the type of car. Okay, she
Goes
knew
back to
exactly
detail, right?
how
She
she
know what she
knew
wanted, and
what
she
she
was
wanted.
very detailed about it.
So there's a mindset again with legacy. So again, raising our kids in this legacy program, it's about developing the mindset so they know how to handle the money. So she knew what she wanted in detail, cross state to get it, went to the dealership, was able, we were there, my husband and I were there with her, how she handled everything. It was wonderful. That first time experience with your child, you can't beat
Yes,
that as they handle everything. But that was the powers that she had funds to access from her bank to be able to purchase her own vehicle. And because she was young, they went high interest rate, all this type of thing. But she was able to do what she wanted to do with her bank.
exactly. I mean, that is so powerful. I wish I Marcella, our goal is to really make sure people understand this concept. And it doesn't matter the ins and outs as far as you watching this. This is where you hire the experts to come in to make sure that all the I's are dotted, all the T's are crossed. Because when it's structured properly with the right engineer, and that's what we are, then you have a strategy in place that will outlive you. In other words, when we talk about legacy, Marcella, please break down your definition again. I just love it.
Yeah, people need to understand this. Legacy is how other people experience your existence. And come
Love
on
it.
now, life insurance is, I mean, the way your family will experience your existence through the decision, being intentional about setting up this structure for them. I mean, if that doesn't say legacy, I don't know. I don't know what else to tell
I
you.
don't know either. I really don't.
I'm done.
And if you notice everything that we're talking about here, it's really about while you are alive. Okay. There's nothing
Yes,
to do with your death. Your family's not getting a
exactly.
lump sum of tax-free money from a life insurance policy when
Yeah,
you die. We're not trying to kill you off. We want you alive. We
really.
want you healthy. We want you prospering.
Yes,
This strategy will allow you to do that, here to enjoy it. And
yes.
that's the main reason, Marcella, you and I got into this industry. We want to enjoy it today. Okay. We love our
Exactly.
family, but we want to enjoy this. Okay. And it's not being selfish, because that's what we're designed. The purpose of creating this bank, this legacy that allows us to do things today. And just as important, equally as important, it's teaching. And I love how you said it, Marcella. It's teaching the next generation. They're not even getting this in school. How they can now perpetuate that education to their children and
Yes.
their children. I mean, imagine the power of your kids saying, "Oh well, I want to start my own business. I'm going to go to my family bank," and their friends are like, "Family bank? What are you talking about?
Exactly.
You don't have
Exactly.
a family bank?" That's the conversation
Right.
I want to hear when somebody says, "You don't have a family bank? That's
Oh,
weird."
Mark, that's so good. That
You
should be,
know,
oh, I love that so much.
yes,
That really should be the weird part. You don't have a family bank?
right.
Oh,
But you
okay,
go to, where do
I'm
you
good
go
for that.
borrow money from? A bank,
Exactly. Yes.
a credit union. What's that?
Yeah. What's
That
that? I
that
love
is
it.
powerful. That is so
Yes.
powerful. So
That is so
these
great.
are things that we're talking about here, but we're just not stopping there. We also want to talk about how you have these other living benefits, and these are to address what we call unforeseen illness, right? Because there might be some of you on here watching, right? I have some news for you. At some point, you're not going to live forever. Okay. It's going to happen. We don't know when it's going to happen. So, yes, there's a death benefit for that. That's
Yes.
fine. But the one thing we can say is that we don't know when that's going to happen, but along the way, health issues will come up. And
Mhm.
hopefully you're doing your best to manage that and be in the best shape as possible as long as possible. But there are things that would happen. And this is the one thing I'm really excited about with the life insurance industry is that there's several companies out there and more starting to do this where
Yeah.
they're adding these living benefits that you
Yes.
can benefit from the death benefit while you're alive today.
Mhm.
So
Pow
let me touch on some of those today, right?
Please do
So
more because it's powerful. People really need to understand that this is a part of this process, a strategy. So yes, please go on.
exactly. As a matter of fact, you and I just got some new policies because we wanted some of the newer riders that they're now offering, right? So,
That's right.
as they upgrade, it's like, oh, we got to upgrade our policies.
Read that
Time to
down,
get a
right?
new one.
So you
I
can
don't have this one. Oh, time to get a new one because I want those benefits.
Mhm.
So this is very important. So let me break down just a couple here. So the first one I think most people are familiar with is what we call the terminal illness rider, or it may have some other type of name, but typically you would hear terminal illness. And it kind of states what it is, right? That in the event that you will cease to exist within 12 to 24 months, depending on the carrier,
Mhm.
then they would advance you some of the death benefit, whatever amount that they have structured inside their policy. And that's great. That's awesome to have. I'm glad it's there. Yeah, but it's still kind of a gloom and doom situation, right? That
Right,
pretty much
right, it
is
is.
very close to the death benefit, right? That's fine, but at least it's there. There
Mhm.
almost most carriers have that. But now we have what we call a chronic illness, right? So when we talk about a chronic illness, I want you to think about some of the things you do every day, right? So let me give you some examples. You take a bath, right? You shower, you get dressed, you eat, these type of things that we do on a day-to-day basis. But with the chronic illness, what it says that if you're unable to do two of these six, there's six categories altogether. If you're unable to do two of these six activities, I should say, then
Mhm.
this rider will kick in and provide you money from the death benefits while you're alive to address
Mm.
your illness. Again, we can go into more detail about it, but I'm just sharing with you the basic
That's
concept.
amazing.
So if you're unable to dress yourself or feed yourself, those are two of the six, then of course with medical documentation, then we can activate this rider and now you have your policy paying you for either a nurse or whatever you need during this time to address your
Mhm.
specific needs. And some
So good.
carriers, Marcella, some carriers, I know you know this, I'm talking to you, but I know you know this, some carriers will not even define how you use the money. So again, if we're
Right.
looking at an example, you may
Mhm.
have an in-law, a family member, a sibling, whatever, helping you out because of the situation that you're in. Maybe they can't work as much. Well, now you can use the life insurance policy, activate the rider, give them the money because they're sacrificing their income for you. Now you can at least offset some of that and it's not costing you anything because it's coming from
Mhm.
the life insurance policy. And because it is
Mhm.
coming from the death benefit, that money you're receiving is also tax free. Marcella, I don't know
Oh
how many times I'm going to
my
say tax free today, but I
God.
think it's
Right.
all right.
God, this
Tax
is
free.
amazing.
So again, when we think about living benefits, yes, we could talk about the tax frees of creating a tax free revenue stream. But
Mhm.
then while you're alive, if you come up with an illness, terminal, chronicle, but we're not done there. We still have critical. Critical illnesses is one of the newer ones. It's actually the ones that I'm more excited about because
Mhm.
we all know somebody that has suffered from these.
Yes.
So let me give you an example when it comes to the critical illness, right? Do you know anyone that had cancer? Or let me give you another one, a heart attack. There's a whole list of them. But for time's sake, I'm going to hit the primary ones, right? Cancer, heart attack. Again, if you're hit with any one of these, the rider kicks in
Mhm.
and they'll give you a set amount of money depending on the category. that you fall under, the higher the category, the more money you would receive on a monthly basis while you're in this period of your life. Again, that can offset. And
That's right.
Marcella, I can't tell you how powerful this is, because you and I have seen so many people who do not have enough savings for
Yes.
emergencies. And let's say their health care doesn't carry all the costs, and now they have to come out of pocket. And how many times have we seen people have to tap into their retirement money
Yes.
to make up the
Too many
difference?
times. Too
Too
many
many
times.
times. Exactly.
Yes.
Exactly. Your
Yeah.
retirement money serves one purpose. That is your future income for your retirement self. And as I tell people, the retirement you relies 100% on your contributions today. And then the more you neglect today,
Mm-hmm.
the bigger the impact your future you will be affected by. So
Yes.
you
And
have
that's
to
like, say that again, Mark. Say that again.
the man, I said it so I mean,
The
I
future
came from
you.
so
The future
so
you.
yeah, you got to go back and rewind this part. But if I remember correctly, the less you feed the less you do today, the less you pay yourself today when it comes to retirement, the bigger the impact the future you, the retirement you will hit. Because again, the retirement you relies 100% on the you today.
That's right.
I said it
That's
right.
right.
Right?
That's
So,
right.
so how can we offset that? Life insurance. We can utilize the rider to now supplement you having to tap into these other resources that you shouldn't be touching into to now offset those expenses.
Do
And the
y'all understand, before you go, do you understand what we're talking about? This is not your grandparents' life insurance. We are not even, again, we're not talking about death here. We're actually bringing the life back in life insurance. These writers are amazing. And as Mark just said, we all know someone who's experienced these critical illnesses. So we need, I mean, we can't ignore the fact that this is a necessity. So I don't know. You maybe you can ignore it, but I can't ignore it.
Marcella, we can't ignore it. No,
We can't
exactly.
ignore
And
it.
that's why we're here today. We want to make sure that we're going to force people not to be able to ignore it. That's how
Yes.
we're going to break it down,
Yeah,
right?
man. We're gonna
So
in your face. You can't
in your
ignore
face,
it. You
right? So
can't
in
hide.
your face, when we talk about the living benefits, the terminal illness, the chronic illness, the critical, and then for certain carriers, they take it even a step further, what we call the critical injury. The previous one I talked about was the critical illness. Now we're talking about critical injury. And this one has a personal tone for me because
Mhm.
now we're talking about if you're diagnosed with a coma or being or paralysis
Yes.
or dramatic brain injury,
Mhm.
aka concussion.
Mhm.
This is something because we've all been
Ooh,
hearing about concussion,
yes.
and two of my children have experienced traumatic brain injury, aka concussions. A dear friend of mine, I was with her when she experienced a concussion. It's severe. There's a scale, and she was on the high end of that scale with her concussion. I was there when she had that experience, and I would never forget that. And I saw the power of that rider come into play. So these are things that can benefit you today. The life and life insurance, it's addressing your life, your living self while
Mhm.
you are alive. And Marcella, I love how you said it. This is not your grandparents' life insurance. If you were to ask them, grandma, granddad, hey, did your life insurance policy, if you had one, did it have a chronic illness rider? They'd probably look at you as like, what's that?
What? You talk about
What is that? No, they don't have a clue. Why? Because these are new, especially the last one I shared with you, the critical injury. That's
Mhm.
most
Yeah.
carriers don't even have that one yet. It's they're
No.
still trickling in.
No.
So
Yeah.
it's very important that we understand what we're looking at here. So,
Yes.
Marcel, I'm so glad we had this opportunity to share this. It still doesn't feel like it's enough time, but I'm glad we're at least able to at least introduce the abilities that these newer products have, and how
Yeah.
they're not the same as our grandparents' policies, sometimes even our parents' policies. And we should understand that and take advantage of these strategies that, let's face it, the wealthy, the affluent's been using for decades. For
Mm, mm, for
decades. Why can't we
decades.
take that same strategy and apply it to ourselves?
Yes, we have access now. We have access. There's no excuses anymore to take hold of your own financial future, build your legacy. Do not leave that up to anyone else. It is on you. It's your journey. So do it for yourself, for your family, and allow other people to experience your existence in a powerful way. That's what we're talking about, that legacy.
Mhm.
So I'm so glad we're able to do this. And again, stay up to date with the videos. They drop every week. So subscribe to our YouTube channel because next week, Mark, we'll be bringing even more information about how life insurance works towards building our legacy, some more strategies. And yeah, I mean, you don't want to miss this. You definitely don't want to miss this. In the meantime, you can visit our website at www.legacybuildergroup.com. And you can go on, when you go onto that website on our homepage, scroll down to the bottom, and you'll see a free resource, which is our legacy checklist, what every family should be talking about. We have questions to really get the conversation going with your family, to have that legacy conversation, to start transitioning into a legacy mindset. So go ahead, download the free legacy checklist that we have there, subscribe to our YouTube, follow us on social media, subscribe to our email blast. You know what I'm saying? Just stay connected with us so you can get all this good stuff. So thank you for joining us again, Mark. This was another good one.
Oh, excellent. This is you know me, I'm not someone that's big on social media and anything, but what I do get excited about is sharing this information. So this is
Yeah.
the platform. I thank you for creating this opportunity, Marcella, and let's just keep going with it.
Let's just keep going with it. Thank you, everyone, for joining us, and we will see you next time.